Listen carefully, because what I'm about to say might make you uncomfortable. Imagine it's 2026. The market opens and within minutes your screen turns red, your stomach tightens, your heart beats faster than it should. You refresh the app again and again. You tell yourself, it's just temporary, but deep down there's fear, because the money you invested was never money you were ready to lose. Pause, silence. This is the moment where most people break. Torture before we dive into the topic. Don't forget to like the video, subscribe channel, and tell us in the comments where you're watching from. Now let me tell you something no one likes to admit. This topic, the one that could save you from that exact moment, is ignored by almost everyone. Not because it's complicated, not because it's secret, but because it's boring and it's honest. People don't want to hear that the real danger isn't the stock market. They don't want to hear that the real risk is them. We live in a world addicted to excitement. Quick wins, fast money, screenshots of profits with zero context. No one posts the anxiety. No one posts the sleepless nights. No one posts the panic sell at the bottom. And so people believe investing starts with buying a stock. It doesn't. It starts way before that, with discipline, with preparation, with knowing your limits. But here's the uncomfortable truth. Preparation doesn't feel powerful. It doesn't feel impressive. It doesn't give you instant validation. So people skip it. They tell themselves, I'll figure it out as I go. They say, everyone else is doing it. They say, what's the worst that can happen? And then reality answers that question. The reason this topic is ignored is because it forces you to slow down when the world is screaming at you to rush. It forces you to look at your income, your expenses, your habits, your emotions. And most people don't want to do that because it's easier to blame the market than to admit you walked in unprepared. It's easier to call investing a scam than to admit you invested with fear. Let me be very clear. The stock market is not designed to be fair. It's designed to reward discipline and punish impulsive behavior. If you enter it without a foundation, it doesn't teach you a lesson gently. It takes your money and your confidence at the same time. And that's why this topic matters, not because it makes you rich overnight, but because it keeps you alive financially when everything else feels out of control. Most people ignore this message until the damage is done. My question is, will you wait for pain to force you to learn, or will you learn before the pain arrives? Let me take you to a quiet moment. Late at night, the house is silent, everyone else is asleep, and you're staring at your phone. The market closed hours ago, but your mind didn't, because the number you saw today won't leave you alone. This is where the biggest mistake shows itself. Not on the screen, but inside your chest. The biggest mistake people make is investing money they still need. Not extra money, not future money, money tied to rent, to groceries, to emergencies, to peace of mind. And when you do that, something dangerous happens. Every small drop feels personal. Every red day feels like an attack. Your heart reacts before your brain can think. You tell yourself, I'm investing, but your body knows the truth. You're scared, because this isn't money you were ready to let go of. This is survival money, and survival money should never be in the market. Here's the part no one likes to say out loud. When you invest money you need, you lose control before you even begin. You start checking prices too often. You stop thinking long term. You start hoping instead of planning. Hope is not a strategy. Hope is what desperate people cling to, and the market feeds on desperation. You promise yourself you'll hold. You say, I believe in this. But then one bad headline hits, one unexpected drop, one red morning. And suddenly belief turns into panic. You sell, not because the investment failed, but because your foundation did. This is why smart people still lose money. Not because they're stupid, not because they didn't research, but because they brought fear into a place that punishes fear instantly. Here's another hard truth. Knowledge does not protect you. If your money situation is weak, you can watch every video, read every book, follow every expert. But if losing that money changes your life, you will make emotional decisions. Every time. The market doesn't care how confident you sounded yesterday. It only reacts to what you do under pressure. And pressure exposes the truth. Most people don't lose because of bad stocks. They lose because they entered the game already cornered, already stressed, already hoping instead of prepared. Silence. Think about this for a moment. If your investment dropped 30% tomorrow, would your life stay the same? Or would everything feel unstable? That answer tells you everything. The biggest mistake isn't picking the wrong stock. It's walking into the market with money that controls your emotions. And until that changes, the market will always feel like an enemy. Not because it's cruel, but because it's honest. And honesty hurts when you weren't ready to hear it. Let me slow this down, because this is where everything changes. The real shift doesn't happen in your bank account. It happens in your head. Most people think investing is about being smart, about finding the right stock, about timing the market. It's not. The mindset most people walk in with is dangerous. They think, yes, this will fix my life. They think, I need this to work. And the moment you need the market, you've already lost. Here's the mindset shift almost no one makes. You don't invest to get rich fast. You invest so you never feel trapped again. Read that again, slowly. Because when your goal is fast money, you rush, you ignore risk, you convince yourself stories instead of facts. But when your goal is survival first, everything changes. You stop asking, how much can I make? And you start asking, how much can I lose and still be okay? That question alone separates amateurs from professionals. Professionals don't fall in love with stocks. They don't chase excitement. They don't panic over noise. They think in systems. They think in years. They think in probabilities. They respect downside more than upside. Most people don't want to hear this because it feels slow, it feels boring. But boring is powerful. Boring means you can breathe. Boring means your rent is paid no matter what the market does. Boring means you don't need to check your phone every 5 minutes. Here's the uncomfortable part. If the market dropping makes you anxious, that's not a market problem. That's a mindset problem. It means your life and your investments are tangled together. It means one bad week can shake your confidence. It means you're emotionally exposed. And emotional exposure is expensive. The right mindset creates distance. Distance between your emotions and your money. You stop reacting. You stop chasing. You stop making decisions out of fear. Instead, you plan. You expect downturns. You prepare for volatility. You accept that losses are part of the process, not a personal failure. This mindset doesn't make you fearless. It makes you realistic. And realism is strength, silence. Ask yourself this honestly. Do you want excitement or do you want control? Because you don't get both. Control comes from patience, from preparation, from accepting that wealth is built quietly. The mindset shift is simple, but not easy. You stop using the market as a rescue plan, and you start using it as a tool. A tool works for you only when you know how to handle it. Without this shift, every strategy breaks. Every plan collapses. Every loss feels personal. But with it, the market stops being a threat and starts becoming what it was always meant to be, an opportunity for those who are mentally ready to handle it. Let's get practical now, because this is where fantasy ends and real life begins. This part isn't exciting. There's no adrenaline here, no big promises. But this is the line that separates people who survive from people who stay stuck. Start with income, not dreams, not potential, actual income. Ask yourself, if the market disappeared tomorrow, would my life still function? If the answer is no, then investing is not your first move. Stability comes before growth. You need income that shows up whether you're motivated or not. Money you can count on. Money that pays your bills without stress. Without that, every investment feels like pressure. Now, expenses. This is where most people avoid looking. Because numbers don't lie. People think they're bad with money. But the truth is, they're just unaware. Money leaks quietly. Subscriptions you forgot, small spending that feels harmless, daily habits that drain you slowly. And when you don't track it, you don't control it. Write it down, all of it, not to judge yourself, but to face reality. Because reality is where power starts. Then comes the safety net. This is non-negotiable. Life will interrupt your plans. It always does. The emergency, the bill you didn't expect, the job issue. If you don't have cash for that, you'll pull from your investments. And that's how long-term plans die early. Your safety net isn't about fear. It's about freedom. Freedom to leave your investments alone when the market is ugly. Only after this, only after income, expenses, and protection are handled do you invest. Not emotionally, not impulsively, but calmly. You invest knowing your life doesn't depend on today's price. And that changes everything. Here's what most people get wrong. They think doing this means they're behind. They think they're late. They think others are winning while they're preparing. But preparation isn't delay. It's acceleration without destruction. People who skip this step might look ahead for a while until one bad moment wipes them out. Silence. Ask yourself something honest. Do you want fast progress that collapses or slow progress that lasts? Because income control, expense awareness, and a safety buffer turn investing from stress into strategy. Without these steps, every move feels heavy. With them, you stop reacting. You stop guessing. You start building something that doesn't fall apart the moment life gets uncomfortable. This is where real confidence is built. Not in the market, but in yourself. Let me tell you what no one warns you about. The biggest damage from bad investing decisions isn't financial. It's psychological. It creeps in quietly. It sits with you when you're alone. It follows you into your sleep. When your money situation is unstable, your mind never fully rests. You wake up already tired. Your thoughts race. You replay decisions over and over. Why did I buy that? Why didn't I sell earlier? What if it never comes back? These thoughts don't stop. They stack. They get heavier. And the scary part, you start doubting yourself. Not just as an investor, but as a person, your confidence erodes. You become hesitant. You second guess everything. This is what emotional exposure does. When your financial foundation is weak, the market controls your mood. A green day gives you relief. A red day ruins your focus. You stop being present with people you care about. Your mind is somewhere else, running scenarios that haven't even happened yet. That stress spills over into your work, your relationships, your health. People think money stress is normal. It's not. It's a signal that something is out of alignment. Now, here's the shift most people never experience. When your base is solid, when your bills are covered, when emergencies don't threaten your survival, your nervous system calms down. The market can drop and you don't panic. You still feel it, but it doesn't own you. You think clearly. You respond instead of react. And clarity is rare. Clarity gives you an edge. While others are selling out of fear, you're steady. While others are glued to their screens, you're focused on your life. This emotional stability compounds just like money. Small decisions improve, confidence rebuilds, trust in yourself returns. Silence. Ask yourself this quietly. How much mental energy have you lost worrying about money? How many moments were ruined by stress that didn't need to exist? This is why the foundation matters, not just for returns, but for peace. Because wealth without peace is just another form of poverty. When your emotions are protected, your decisions improve. And when your decisions improve, everything else follows. The market will always move. The question is, will it move you with it, or will you finally be strong enough to stand still when others fall apart? Now imagine this, not tomorrow, but years from now. You wake up one morning and there's no rush in your chest, no panic, no checking your phone first thing, no fear of what the market did overnight, because your life doesn't depend on it. This is what happens when you follow this path long enough. You stop chasing money and money starts behaving differently around you. Not magically, not overnight, but steadily, quietly. Your decisions slow down, and that's a good thing. You don't feel pressure to jump in. You don't feel shame for waiting. You understand that time is working for you now. When markets fall, you don't collapse with them. When others panic, you stay grounded. Not because you're smarter, but because you're prepared. And preparation creates distance. Distance between you and fear, distance between you and impulse. That distance gives you clarity. Years pass, and something subtle but powerful happens. Your confidence isn't loud. It doesn't need to be. You've seen downturns, you've stayed standing, you've learned that survival comes before growth. And because you survived, growth followed naturally. Your money compounds. But so does your patience, so does your discipline, so does your self-respect. You're no longer impressed by hype. You're no longer shaken by noise. You understand the difference between movement and progress. Silence. Look back at the version of you who once felt desperate, the one who hoped a single decision would change everything. That version feels far away now, because you chose a different path. One that wasn't exciting, but was strong. This is the long-term result. Not just more money, but control. Control over your reactions, control over your future, control over your peace. And here's the part most people miss. Once you have that, no market cycle can take it from you. Crashes come and go, headlines change, fear moves from person to person, but you remain steady because you didn't build on hope, you built on discipline. And discipline over time becomes freedom. This isn't a promise of riches. It's something more valuable. A life where money no longer decides how you feel, how you think, or how you sleep. That's the real win. And it only belongs to those patient enough to earn it.